Everybody. Yeah, it's snowing here. It was 71 degrees yesterday afternoon, and it is freaking snowing right now. It's like, gosh, what is it? Got a weather alert. It's like, it was supposed to be 40 this morning, but it's like 34 or something like that, and it's snowing. It's like, what the fudge is happening? I mean, it was like, I was out, I was out putting a fan blade back on my air conditioner unit outside last night at midnight almost. I guess it was 11:45, whatever. And it was 53 degrees outside. And I was like, wake up this morning, it's like, what the fudge happened? Anyway, I don't know. Whatever. Welcome to the show, everybody. And if you want to chat with me, say hey, good morning, like all these awesome people, gotta click the button, be a subscriber on the channel. And a few seconds later, you can chat. Like, it enables the chat. And if you want to hang out, go deeper, maybe even get in Discord, you can be a channel member. That option is available. Come join the channel, support me, and all the things I do. So welcome, everybody. And CPI is out this morning. Let's guess pitter patter, let's get at her. Let's start jumping into it. All trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. That means while I predict some things, sometimes those things don't come true, and there's a substantial risk of loss if you put money on a trade trying to take advantage of something I might predict. Either way, like if you bet against me or bet with me, you might lose money. All right. This presentation intended to be informational, educational, fun, entertaining. It's not a recommendation to be buying or selling any financial instrument. So don't buy stocks, options, bonds, forex, futures, cryptos, treasuries. Don't long them, don't short them, don't trade them. You may lose money. All right. Back to the first sentence. And if you desire personal financial advice, you need to hire and consult a financial advisor, which is not what I'm doing. I'm not telling you what to do. I'm not even suggesting you do any of the things I talk about. It's just one of those things. If you need somebody to tell you what buttons to push, you're going to have to go hire and consult a financial advisor. So this week, right here, we got CPI coming out. And look at that, in line. I was saying we, plus or minus 0.1, highly likely we'd just come in line. There it is, in line. And what's more interesting, the month of our month in line and the core in line. So everything came in line. And I think the markets pop, if you will. I mean, we have it's not much of a pop, but that pop right there, well, it's probably because everybody, the algos at least, I don't know about everybody, the algos at least expect us to probably do a rate cut next week during the FOMC at this point. Now, we do have PPI coming out tomorrow. It's Producer Price Index. This is Consumer Price Index, inflation, kind of a read on inflation, although they take out all the stuff that is inflationary, so how great is it? I don't know. Maybe it's good. I think we should go back to the 80s style number, and this would be sitting up more like 10% instead of, or maybe even 8% instead of 2%. I don't know. You tell me. Nothing's coming down in price, that's for sure. We're still going up at almost 3% a year. And I mean, if things were, it's kind of funny, when things are $100 and it goes up 3% or 2.7%, things went from $100 to $102, $102.70, $103, But if we went through a big inflationary period and those $100 things went up to $200, $300, kind of like we saw a lot of things like rapidly increased in price up to like $100, $200, things that used to cost like $100 just a few years ago. And now 2.7% is now $6 a year. We're going up. It's kind of one of those things that builds on itself. It's like the rate of increase, while the percentage increase is still the same, the true dollar value is bigger because the prices are higher. So that sucks. No two ways about it. That's basically, a a dumpster fire, if you will. And my dumpster is green, so it shows up clear. I should turn that. Let's see. Let's see if I can do this really quickly. Let's put it on this one, and let's see. Still black. Let's see. Hold on. Look at this. Look at this thing. It glows too. Isn't this cool? I mean, look it. It's got like a little fire thing going. That's really cool. One of the members sent that to me. It's an ornament. Like, it's pretty cool. Dumpster fire ornament. And there's the behind the screens. I have a green screen going, so close this back up and flip me back over the charts. Anyway, yeah, it's kind of a snowball effect, as Goose says in the chat there. Like, it compounds, and it increases. 3% is always 3%, but 3% of $100 is $3. 3% of $100 is $3. 3% of $1,000 is $30. So that's, as the things get higher. And I think I was talking about this last night. A cut is very dangerous at this point. Look at this. They don't have much room. There's not much margin for... Oh, look, my drawings came back. Freaking weird. There's not much margin for error here. Look at how close these are. If they cut below the market rate, we're getting back to this scenario over here. Well, this one over here, I guess. This over here, we're getting back to that, and we went a little spicier than I thought, and then they're cutting back down. That's where I thought we should hold, all the way back here. Went up a little too high, caused a little bit of stress in the economy. Now we're coming back down, but the blue line, which is the DGS2, Delta Golf CR2, 2-year Treasury constant maturity rate. In case you're new here, you haven't ever seen this, Delta Golf CR2. How do you pull this up? Go to tradingview.com, make your account, even a basic free account. You can look at this. Delta Golf Sierra 2, DGS2, right there. That's the blue line. You come up here, click this button right here, type FED, FUNDS, search FED, FUNDS. Yeah, type it right there, FED, FUNDS, Fed Funds. Click that button. That'll put the orange on the... Put it on here. You can change whatever color you want. Set it up. Style. Mine's kind of orangey. And there you go. It's your own version of this chart. Now, way back over here, I speculated that we'd kind of get to a stasis point and hold, and then possibly the blue would start accelerating higher again, and then the orange would have to chase it higher. Look where we got. We're getting down. We're going to cut another point. Another quarter point. They can only change it by a quarter point. Right now we're between 4.5 and 4.75. That's the current target zone. So right in here, my little boxes keep going away. We're right in there. That's why it says 4.64. That's right in between 4.5 and 4.75. And we cut another quarter point. That puts us down between 4.25 and 4.5. Right in here. Look where the market rate is. There is no room for error at that point. And you can say, well, they're trying to be with the market rate. Kinda. Now, look what happened last time. This is one reason I'm very, very concerned. Look right here. This is the last cycle where we did this, all right? Raising rates, went flat, the market topped out, came back down through. They started doing rate cuts. They caught the market rate. Anybody know what happened here? Oh, it's just coincidence. Just COVID, It's just coincidence that COVID happened right there. Okay. The market tends to repeat the same kind of scenarios, not exactly the same. The reason's never exactly the same. You know what happened right there? Giant market flush. You know what happened over here? 2007, 2008. Same scenario. When the orange gets above the blue, leads to a giant market flush out at some point. Go back another one. Remember this one? .com bust? This just must be coincidence, right? Just coincidence. When the orange gets above the blue, danger time. Now, I was speculating we may go up here before we actually flush it, but this could just happen in the beginning of the year right here. We could just... Might just have a problem right there. I don't know. I thought we might go higher, but we might just flush it out, baby. Now, we could do a flush and then rip and then do a bigger flush too. So, very suspicious right now. Very suspicious. So, first half of the year, I expect something to happen in the market. First half of the year. Kind of, yeah, possibly we run it out to Q3, but right now it's looking like the stars are aligning first half of the year. Keep coming back for more. I'll keep you updated as far as where we are in this problem. So, back to the markets. Here's the high. Here's the low. Here's the CPI reaction. Nice pop. I mean, 20 points. Not too shabby. Resistance at 618 level. Right there. We're actually sitting at the 1 hour. Like, you see how we busted through it. We had a little resistance going through it on the downside. Then we had resistance above us and we rejected it and went down. So this was a very nice flush right here. So far, coming back up. The area to pay attention to right now will be this level right around 6,085 on ES. If you're not sure what the heck ES is, it's the S&P 500 futures. Why am I looking at that and not S&P 500 or SPY? Because S&P 500 cash, SPX, isn't moving. It hasn't moved since 4 o'clock yesterday, Eastern time. Closed. That's the way the cash index works. It's only open during the cash open market. It stopped. All right. SPY is a derivative. Where does SPY get its numbers? When the market's closed? Well, partly from the futures. Partly from all the constituents. So it's a very complicated way, a very, very complicated mix, but this is the closest read we have. All right. It doesn't tend to leave a lot of gaps. If you look down through here, there's not many gaps day to day to day. It stays open almost all the time. So I like to pay attention to this a little more than I like, I feel like this tells more truth to me with more price action than anything else. As far as how and where the S&P 500 is likely to go next. So we have this resistance. If we hold this area, it can be as high as up here, possibly as low as right there where we consolidated. Those are both consolidations. So we've got this bigger area right here that we could come up and test. But that 618 level is my ideal point. If we pop up there, hit it, and break back below that hourly roadmap line, highly likely we're coming back to the lows, and highly likely we're going down to the 4-hour chart roadmap line. Sits right down here. It just updated right there. Watch for that to bounce there and come down here. Now, if we can get through, everything is champagne kisses and dreams. We're looking at 61.21 on the upside, possibly even up to 61.50. There you go. See, there's the levels. 61.20, 61.30, 61.50. That's the upside. There's the downside. And if we come down here, if we hold support, we can go up again. If we break through this, back test it, bigger downside potential. This is how you keep track of it, all right? That's how you know, like, where are we going? Where are we going? And look at that move. I'm moving alert without even trying, and I can't move anything else when I do try. Here's the daily roadmap line all the way down here. So if we start breaking this at 6,000, there's the next one. That's a big zone there between 6,000 and 5,600. 400 points. A 6% potential flush there. Like, no, we can't. We wouldn't do that. Look right over here. See this guy? 3 days. Same scenario. Dropped in, rallied up, and right down. Eerily similar to that right there. And it looks like we're doing this first part right here. We're doing this little part. May do this, make a little rally, and then right there. I mean, I'm always looking for patterns, right? See that looks like the first little part. Maybe not quite as big a flush. Interesting though. Check this out. Saw this last night when I was doing 30 minutes of awesome. Thank you for those that showed up. Check this out. Look what we did yesterday. Stocks above the 20-day S5TW. This is an index. It's just a tally. Take the S&P 500 stocks, 500 stocks. How many are above their 20-day? How many are below? Right now, 34% of them are above their 20-day moving average. We tend to oscillate this. We were up here. I said, watch out. We're probably going to take this back down pretty quickly. Well, it didn't take long. We're back at the lows we've had pretty much all summer. This is a point where we can reverse back higher from. There's potential here. There's also potential for this to go visit under 20. We haven't done that since all the way back here in April. You know, just if we do get below 20, watch out. We're probably going to rip it higher again, at least for a few days. It's kind of the way this works. We oscillate between the tops and the bottoms. 20 and 80, those are kind of my extreme levels, and then 10 and 90 if you want secondary levels. So S5FI, stocks above their 50-day. I actually have the 90 marked up here. That one came back down too. And that one never got up to the top. So we are below that uptrend of lows. Caution, this is a warning light right here. We're pushing extremes here. This could flush on down. This one hasn't been down to the bottom for a year, pretty much. Since November, over a year now. Might need to flush some money out of the market. Eventually, we're coming down here. Eventually, it's going to happen. All right, we're not staying up at the top forever. It's just not going to happen. S5TW or S5TH. This is stocks above their 200-day. Different picture here. We're just hanging in the upper range. Not really affecting much up there. Still have 67% of the S&P 500 stocks above their 200-day. Just kind of hanging out. If we get below this zone right here, not just reject like we did so far all the pokes, we're probably going to do a bigger flush. And again, this one down to 20. We haven't been down there since October 22 when the market did the big correction. We're working on climbing, but this looks eerily similar. Again, check it out. See how we consolidated right here? Consolidate over here. Yeah, just take your pick. Which one? I mean, when we consolidate on the high end, usually the flush is pretty big. You know, a lot of us don't remember this. Let's go take a look at it real quick. Ugh. That was pretty gnarly. Look at that. COVID way overshadowed that one, but that was a pretty gnarly one right there. 20% down. Went down from October right through Christmas. Then we had another one right there. 35% down. That one just happened really fast. It was a couple weeks, whereas this one was a couple months. Almost equally as bad. And just this one happened really fast. And this one took a few months. Almost 3 times longer. 23 bars versus 59 bars. So just eerie similarities in the market. All right. In Q, jump it over here. Look at this. Still holding up pretty strong. Still holding up pretty strong. This has upside potential still to go. 22,000. We held the 1 hour right here. We tested into it. Draw, please. There we go. Tested into it right there. Held it pretty well. Break back out above this level right up in here. Highly likely we can go on up. The next big major fib line sitting right up here just below 22,000. Not that far away. That looks pretty strong. So even though ES looks a little weak, this one looking more strong, my friend, right there. So big tech indicating we could potentially go higher. Russell, look at this one. Whew. Gnarly chart right here. Already rejecting the 1 hour from below. This can flush much bigger. We're already down to the 4 hour. And that daily right here. This is small caps, small, medium, some mid caps, mostly small caps. This is where 85% of the country works. So down there, if I've got an alert right there. If we start breaking below that, we're probably heading on down. That's probably the direction. All right, that's kind of what I got my eye on for the indexes. Oil still doing the sideways consolidation. We've tested the bottom 1 time, 2 times, 3 times, 4 times, 5 times, 6 times now. We've tested the bottom a lot more than we've tested the top. So if we soften up the bottom again, yeah, right now, odds of going down we're below the roadmap line right here. Like that's the daily roadmap line. The bias is down. We just haven't been able to break down and make a big flush. So possible potential for this to flush. Really, all I really expect this to do until we do break down, just a big sideways right there, just sideways right out through the inauguration. We'll see. There's the levels. We got to break up through resistance at the roadmap line. We got to break down through this uptrend of lows that we keep testing into. There's the targets. Nothing's really changed. Sideways is still what I expect. Gold, look at that potential breakout cooking. If we can hold on to this today. Next upside targets right up there. Potentially up to 29, 28.50, possibly up to 29. Then what happens? We'll see. We're nearing the top of where I thought we'd rally up to. Nearing the top. SI, silver, not breaking out though. While gold pushing through its resistance, this one not participating. So far today, not participating. So we really need to see this get up here, and then we can be looking for those bigger upside targets. I do have more position on silver than I do on gold right now. The upside potential here, very nice compared to gold. Gold's already kind of played out, but silver needs to catch up. All right, we zoom out and look at this. Jump up to the weekly chart. Check this out. Silver approaching that 618 level. If we can break out, we could go cruising right up here, 56, possibly 60. Whereas gold, on the other hand, on the same big picture, look, we're way above. Like we broke out. 1900 was the breakout. We broke out. We've extended. We're almost up to, see that next fib line up at 3,000, and that can result in a bigger retrace. If we get up to that 2,900, 3,000 area, we can come back and visit the roadmap line over here in a multi-month, possibly even multi-year correction. Whereas silver still has that opportunity. It's like, why do I pay attention to certain charts? Well, this one still has upside opportunity in a big way. But at the same time, it's not doing it. It's not yet participating. So it may let us down. That's why you don't bet everything on any one position. You just put push your chips in, maybe in some sort of leveraged way if that's the way you like to play. Remember, leverage cuts both ways. If you're right, you make a lot of money. If you're wrong, hopefully you just lose a little money, right? It's not being wrong that costs you big money. It's staying wrong and doubling down and quadrupling down. So if you're proven wrong by the market, you got to know where you're being proved wrong. If you get proved wrong, we end up below the roadmap line. It's time to call it quits, right? You're wrong, too bad. And there's always a possibility it fools you and then turns around and goes to the target. But we've seen that on something like this one. Elf Beauty. I ran out of time. I was like, well, they proved me wrong. Right there. And then it runs right up through a bunch of my targets. So that sucked. Now we're waiting for the next opportunity. And Bitcoin rallying back up again, just still churning. Churning, burn. Let's just, let's see. Let's clean up a few things. We've talked about a lot of stuff. I want to leave the time frame stuff on here. Let's just clean this up. So we can talk about a few things. Look at that. All the way back before the halving, I predicted this would be where the breakout is. And look at that. Happening right on the line. Can't make this stuff up. All right. Here's the high, from the last halving. Here's the low. Looky, where we're at hitting. So this is non-log mode, all right? Non-log mode. Right up to the 1618. But every time Bitcoin's done a halving in the past, we've done log mode runs, right? So this puts us at the 1272 right now. A little bit of resistance, having trouble getting through. It's kind of funny how this works. And that puts the upside target potentially right up in this zone right here. And we could get there faster. But if we get there, it's time to watch out. 1618 has been hit every halving event so far in the past. 1272. I mean the 2.272, excuse me. The 2.272, 227.2 extension has been hit 3 out of the 4 times. Last time, the last cycle, this one over here in 21, we did not get the extension. That may be due to the law of big numbers. And this time, maybe no exception, we may not be able to push it that higher because of the law of big numbers. So this is the one I'm focused on right now. That's attainable. We can get up into this $150,000 to $180,000 area. That's only 50 to 80% higher than where we are now. Most of the move is done. Like we started here. If you're late to the party, I'm sorry. Pay attention again in 2026 when we make a new low. We're going to go down. It's going to happen. We're going to make another one of these lows. We're going up here, very likely, and then we're going to grind it down into a low somewhere over here, probably around 30 to 40,000 in 2026. That'll be your next big buying opportunity for the next run that takes us on up. Now we're likely to hit these $300,000 to $500,000 prices after this on the next cycle in 2028, 2029 out here. All right, this will be the next high. That's the roadmap, years in advance. So this one near the end. Doesn't mean you can't make money, but we're nearing the end of this. And where you been? Where you been the whole time? We've lots of followers here, up pretty significantly on this move. Pretty nice. Ethereum, on the other hand, it's kind of like the silver to gold. You know, Bitcoin already making new highs, gold making new highs, silver lagging, and it's kind of like silver to gold here. Ethereum still hasn't been able to break out. It may not break out. It may just continue to be sucky. I feel like they messed it up. Fundamentally messed up Ethereum when they went to proof of stake. They should have just left it proof of work. Leave something good alone. So you've got this high, you've got this low. If we can possibly break out above these highs and then the all-time high, 6,000 to 7,000, probably where we might stall, hit the target. That's all I expect out of this one right there. Dollar. Little retrace on the way down. So we've got to pull this over to that low. That resistance zone still in the same place, basically right in there. We haven't quite tested into it. If we do, hold it. Come on down would be the expectation. If we break through it, we could go on up at 108 area, 108.50. If we respect it, coming on down this 104.40 area, get below that, and I've got bigger downsides. But so far we're just consolidating, and in a large range. And I do expect us to go back down to the mid 90s, but it might be a while. It might be a little while. We got to work through some more stuff. It's already been a while. Like we've already been. I've been predicting downside for a long time, and we just keep churning sideways. It's kind of like oil. Just need a big flush, and then we can go higher again. NKD. Positive indication. If we can get through this downtrend of highs, then go break out above the top of the box. Global liquidity increasing will push the markets up. 44,000 is the target area for NKD. And if we break out above this level up here, where my alert is up here at 40,400, if we break above that, then global liquidity is increasing, and we're probably going to push the S&P up. 98% correlated to global liquidity. This is the best global liquidity indicator that I can just generally look at right here. Without cooking together a bunch of other numbers. All right, so I go pull everything that's moving $2 or more up in the pre-market, put it on the gainers list. Everything moving $2 or more down in the pre-market, and put it on the decliners list, which is down here somewhere. There's a bunch of stuff on here today. So let's get ripping through some of these and look for opportunities. Now, I'm going to look for two major patterns. One of them is the market roadmap bounce that looks like this. We move down, bounce off of it, and we go for extensions. The second one is called a measured bounce, and looks more like what we did on Netflix way down here. We pop up, retrace, and then get ripping. This one wasn't a great one, but it did form a bottom, and that's a reversal. Now, these both work right side up and upside down, so they present downside opportunities and upside opportunities. The downside opportunity would look more like this one up here, except that one's not very clear either. So that one busted through the roadmap line and never came back to it until we made the bottom. A big flush out there. And we bounced, 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 and we came up here. So Netflix, looking at the giant pattern here, probably resistance up here at 1,050. Getting through that 90% of the way to the 1272. Now, why would I pay attention? Like some charts recent days, I've said some charts you can't use this low, and some charts to have. Well, the reason you can on this chart, you draw it over here, and there was lower price action than that over here. Right? This is not the lowest low. When this point right here, when there's nothing over here that's lower than this on the left, then all this price action over here doesn't matter. Like that's an important point here. So when this is the lowest low, you can only work with what's on the right side. But if you got left side stuff that's lower, we can use this correction and project targets. So 1,050, and if we get spicy over that, 1,700. FNGU still has those upside targets right there, 69, 694. And if we're going to get crazy, this is wild right here. If we're going to get crazy, we could come on up to 1,000, possibly even 2,500. But let's keep it conservative right now. Coin, looking for this to break on out. 427 has been my target in the near term here, and my bigger target's up here around 500, possibly even 800, but that's going to get really crazy. So let's keep it a little more in check. We've been hitting we've been consolidating right at these targets right there, breaking through, puts us up to 427. There you go. Tesla, this could break out and run to 500. If we do that in front of this next earnings right here, if we get up here by this earnings, I would be willing to bet we're going to see an outsized retrace. Possibly back down into the 200 to 300 area. Why would I think that big of a retrace? Let's pull this on up here. Look where the 618 and 50% are. Turn off some of these other targets real quickly. See this low? this high, potential high at 500. Look where it puts. I know there's lots of stuff drawn on here. I'm sorry. Clear a few things off. That was the big downtrend of highs. We broke through it, retested it, and launched off of it. 500. Nice upside potential. Now, also, we can look at this. This high, way back here. This low, way back here. Look at 500 right there. 1448. Possibly we could go to 600. That's still in the cards too. 600, still possible. If we get there before earnings, though, highly likely we come back down, maybe test the roadmap line, maybe test the 50%, and maybe the 618. So that's there's the zones right there. Roadmap line, 50%, 618. And it's this 618, not this 618, but they're right in the same vicinity right there around 235. Now, could it just do there is the possibility we come all up here to 600. We retrace, hold the breakout, and then go on an extension up to 1,000. That's possible. Also possible. Anything's possible, right? Just what's the high probability? Big up really fast, and Tesla's over 70% of the time we pull back on earnings. Our reaction for earnings is a big pullback. That would potentially set us up for a big pullback. Just you have to know the particular stock. All right. PDCO consolidating at the roadmap line here. We've rallied up after hitting downside targets. So we did the market roadmap bounce, went down, hit the downside target. That was a lot of grinding at this level. Looks like a pretty important level at this point at 20. Popping up, grinding at the roadmap line. Can't make this stuff up. Why does it do that? It's just some Elliott wave Fibonacci magic right there that this works. And then pop up here. Look at that today. Pop through. So this is potentially done on the downside with that pop. Run from the high back here to the low down here. Popping above. If we can get that close above the 618 today, right here, we don't just give it back. This level we're looking at right here. We just stay up here. Potential upside 41, 44. Ground it right there, popped up through, and continuation higher. Very nice right there. And again, that low much significantly lower than this low, so that is a correction in a potential uptrend. And let's check one more thing before we move on here. This low, the highest high right there. Oh, look at that measured bounce. That's what. So notwithstanding the potential roadmap bounce there, turn it off for a second. This move up, this retrace, held the 618 level right here. Beautiful. That's what I was talking about when I had the Netflix chart up. We made a move up. Potential 1. Potential 2. And the targets, I'm going to have to pull this on down. So even if this is a corrective type situation, and this was an A, and this is a B, they both hold the same. It could also be the potential. Could be a 1, could be a 2, could be an A, could be a B. Well, if it's a C, here's the target right there. If it's a 3, here's the target right up here. That's why a lot of times I draw that circle right there. Sometimes I draw it up here. So we could go up to this 50 to 70 area, and it could possibly extend to 100. And a breakout above these highs starts confirming we're going to do that bigger move. Nice big upside potential. I mean, that's like a 3x right there if we got up to that 100 area. PDCO, there you go. Moving on. This is how you find the potential opportunities. All right. That's how I find them. See a deal. That's why you come. That's why you hang out with me, right? Resistance right there, breaking out. And here's the case where this was the lowest low. So nothing over here matters. And this is a biotech, which is on my list of don't trade them. So be careful here. If we break out, we could run, but these don't tend to follow the patterns. That's why I don't trade them. And just be cautious. There is upside potential. You could say maybe up to this 78 to 100 area, but it also can reject these prior highs and come back down. MSTR, the odds of this getting put into the NASDAQ seem to be climbing. If we can break out of this consolidation, out of this little consolidation channel we've been in for a few days, if we can break out of the top of it, go on up, beautiful. I wouldn't expect much more than 1,000 on this pop. And this is eerily similar to the story and everything we had on SMCI a year ago. If anybody remembers, SMCI, talking about listing it in the NASDAQ, whatever. And we went on this giant rip. We hit 1,000. And then it was eerily similar. Eerily similar. So MSTU, 2x leverage on MSTR. If you think we're going to 1,000, just take the levels here. Take that 398, run your level all the way up. We take that 398 where we're at right now. Look at the upside potential to 1,000, potentially like 155%. Take that, come on here, 2x leverage. So 2x daily performance. We're expecting 155% on MSTR, which is the underlying. 2x leverage on that, 300%. Let's round down a little bit, maybe 275%. Where would that put us? If we got 275% upside, that put us up here, roughly 582. That's pretty big. And then MSTX, just to do the same thing, if we did roughly 275% upside, roughly right there, 377. I actually have my order at 400. There's an alert at 471. Should put this a little lower. Let's go to 350. I actually have order for selling my shares at, no, I got it at 300. I have my order at 300. Conservative down here, 300. There you go. If we get pushed that all the way up to 1,000 on MSTR, even if this is underperforming, like this may be an underperformance. Right there, only 200%. Not too shabby though. Not too shabby. All right, moving on. PTIR, PLTRs. So PLTR also in the running to get listed with MSTR. And we're getting a little bit of pullback after hitting that level right there at 75. I was expecting some resistance at 75, and next upside target is 108, but this may come back to the roadmap line. That would be pretty vicious. Right there. If we did that, that's a 40% downside. Right? 40% downside. What does that do to PTIR? Roll back up there, grab it. That's a 2x leverage. So 40%. 2x. Simple math. 80%. 40 times 2, 80. 80% downside. Uh-oh. Uh-oh. That could hurt. So just if that retraced the roadmap line, we could be all the way back down at the bottom of this baby. Big risk playing this one right now. I mean, there's big risk on MSTR too if you're playing the leveraged instruments. Reddit. Sitting at resistance. I would be cautious. There is potential to retrace back to the roadmap line. Now the upside, if we're just going to grind here a little bit and then pop again, next up Next resistance up there, probably around 264. DPST. Looks like we're consolidating here. We may retest the breakout. If we come back, retest the breakout, we could go again. And this, these things may come together over here. Roadmap line and that consolidation. Now, as we get to the end of December, usually we see rotation out of big tech and into financials as we come into the end of the quarter. So this may make a bottom and turn. This is 3x leverage on financials. As we get to the beginning of each quarter, we tend to see a little pop take place. You can see the start of June, we see a run. Start of September, we got a little run as financials tend to report at the beginning of each quarter. So as we get into January, we'll probably see a little turn here. Now, that doesn't mean there's not more downside to come, but as we end up toward the end of December and head into January, we'll probably see this turn and get a little rally into those financial earnings the second week, roughly 16th. Yeah, right there. All right, moving on. App. That looks like it wants to come back down. Carvana looks like it wants to come back down. P-Lab. Nice pop. I'd be careful here. We're testing through that resistance, and it's a big red candle so far. If we can close up here green, probably going higher on up to 36, 37. But if we close that back down in here, that may be all of that move. It's a very three-wave-ish type of structure. Right here, 1, 2, 3. And that can result in going lower than that low right there. DXYZ, continuing to be ridiculous, and highly likely we do this repeated over here and flush it back down. Highly likely. NVDU, flashing caution on NVIDIA. If this starts breaking down below the roadmap line, watch out for a bigger retrace on this one and NVIDIA, since this is 2x leverage on NVIDIA. CRWD, this has the potential to come on up to 440, maybe even a bigger move since it did a measured bounce type thing, maybe even up into this 500 to 600 area. FEIM, frequency electronics, probably coming back to the extending out, but probably going to visit the roadmap line before long. Like that's not much I can do with that chart right there. That's pretty rough. Let's see. Potential 17. And I wouldn't look for much more than 17 right now before a bigger retrace takes hold. QMCO, that doesn't mean it can't do it. It just, I look at high probability patterns that occur over and over and over. You know, if something, you know, if you know your neighbor takes out the trash on Wednesday night every week, you know, what do you bet he's going to do on Wednesday night? Take out the trash. I mean, it's like when one of these stocks, you know, when these things tend to do the same pattern over and over and over, what do you bet they do? The same pattern. Is it possible your neighbor's out of town on a Wednesday and doesn't take out the trash? Possible. Like, that's always, you know, it's kind of the same thing on stocks. Like, they tend to do the same kind of moves over and over and over, but it's possible they just do something different. So that's all we're sitting here doing, is looking for the high probability repeatable pattern and, you know, try to take advantage of it. Does it always work? No. Does it work out for me more often than it doesn't? Yeah. Funnel, there, if the coin is going to break out, this will probably go on up to about 100. MSTX, we already talked about. Marvell, chips not superheroes. Nice pop on that one. We're at extensions. Now, we could be topping out here at 121. We may come back, retest the breakouts, and take it on higher up to this 170 area. Or we could break down below the roadmap line and go on a deeper retrace now. So we did make the extension. The next extension could be up here. And it could just do the crazy thing and keep grinding higher and higher and higher. And we just keep climbing the fib ladder. before we get a bigger correction. All right. Sometimes they go on a big run. How do you know when it's going to happen? You just keep playing like that. But these repeatable moves up, retraces, moves up, retraces, moves up, retraces. That's what I'm trying to catch. Like I'm a trend pullback continuation. I'm looking for the new trend, the pullback, find my spot, get the continuation, get out, wait for the pullback, get in, catch the trend, continuation, get out, and wait for the pullback. Oh, that one's not. That was a new trend down. And we bounced off the top, and bounced off the top, bounced off the top, and we made a bottom and potentially reversing here. So that's kind of how you have to keep it. These things kind of go through these cycles. This is a bigger pullback and the bigger potential upside. If you're enjoying the show, let me know in the chat. If you're not enjoying the show, let me know in the chat. Of course, probably close out and left at this point. And nail is below the roadmap line and might go down deeper. Caution. FSLR below the roadmap line and may get a flush. SMH testing the roadmap line. This one had a nice potential setup to get a little extension, but right back to the roadmap line. Just not liking it. That was down here on a 30-minute time frame. That high, that low. We fired off the entry right here. And nothing but consolidation after that. XCUR. Nice potential reversal, but that's a big down trending dumpster fire of a stock here. We had reverse split, another reverse split, and I would just stay the fudge away. Don't want to lose my money on that one. BitX, if Bitcoin can break out, this one's probably popping off. 100 is currently my target. I have a few hundred shares on this. Looking for that 100. MDLZ. Oh, let's talk about something else real quick. Let's go back really quickly. Just wanted to talk about this since some people are with me on TSLL. Like, so here's the upside potential, right? 22% upside. If you were writing the leverage 2x, right? So 20% upside, 22 we were talking about, so double that, 44, round down, 40% upside roughly. Where does that put us? Potential right around 42, maybe even 45. Possible it could get up to 50. Nice, right? We got up to 600. Rallied all the way up to 600. 47% upside. So double that again. 45, 90% upside on TSLL. Could push this on up to like 85, 90 area. So possibly up to 56 to 57. That's your potential upside. If you got in with me when we were back at 10, 9, 10, back down here, awesome. If you're chasing it today, be freaking careful. All right. This thing cuts both ways. Leverage cuts both ways. You can lose an arm and a leg on a retrace. Thanks, Major John. Thanks for the feedback, Diane. Thank you. Thank you. All right. So there you go. That's my warnings. Mondelez put an offer to buy Hershey's. Did y'all see this? They offer to buy out Hershey's. I want to be the biggest chocolate maker in the world. Hershey got a pop. Take it. I took that back. Holy moly. That was Mondelez's offer, or the news broke that Mondelez may buy Hershey or is trying to buy Hershey, and then right back down. Rejected the roadmap line is what that shows, and likely to go extending lower. Although we did reverse in the target zone, so this could come on down though just a little bit lower before we find the bottom and get the big reversal. Hershey was on the decliners list. Mondelez, where'd you go? So their buyout offer was not bullish for their stock either. ARQQ. Reverse split, just choppy, nasty. I wouldn't touch it. TTWO. Oh, thank you, Nina. Rejecting extensions. Watch for a deeper retrace. That would be risky to stay long in right now. ALGS. You can prove me wrong and stay long, but I'm just saying it's risky. It has a reverse split, hiding back here. Danger, danger, danger. Biotech, pharmaceutical stuff. Danger. SOXX. This is indicating there's big trouble in semiconductors. Potential to flush. BitU. 2x leverage on Bitcoin, different way. I like BitX better, but here's another one. And same kind of thing. If we got the 80%, if we have 50%, 80% upside, Ultra basically means 2x leverage. We could be looking at possibly something up to 110 area on BitU. BA, testing into that roadmap line even more, softening it up. If we can get above, retest, that sets us up for the bigger upside. Just waiting for it to prove we're done here. Waiting for it to prove. Like we tested into it right over here and then rejected hard. So watch it. I'm watching this very closely to see if we can get out of here. TMHC. Probably going to come back to the roadmap line. TSM. Probably going to come back to the roadmap line. Oil. Grinding at the lows. Roblox. Potential for that to go higher. We do have a giant gap down right there. Gap downs are dangerous. We may reject off that gap down. There's people that got long here that just want to get out right over here when they get their money back. Watch for that to do something like that. QTUM. Going a little exponential here. At that 1618. This one right around that. So there's significant resistance right around this 80 area right here. It may do another one of these little check mark things before we get it more upside. ARCB, that's just Bitcoin ETF. NVDL, leveraged NVIDIA, indicating trouble, potentially brewing in NVIDIA, which is right here. If we get below this daily roadmap line, watch out. Somebody complained, somebody left me a comment that, man, you're bearish on NVIDIA. I think it's topped out. Like, this is just worked through the topping process. We've made a little extension, and now the downside is extremely risky. If we break through, we can go on a bigger, deeper retrace. It could be a small, deeper retrace. It could be a big, deeper retrace. If you've missed all my conversation on NVIDIA for months and weeks, go watch a couple of my back videos where I go through all the different corrections this has done. It can easily go down to 40. Easily. Just based on just repeating the same corrections it's done in its past. FAS, it doesn't mean long-term we're not going to the moon, but short-term there is giant downside risk. FAS looks like we may pull back, even though as we get into the end of December, we may rip into the new year. AMAT, watch for that to flush on down. It's getting below that support, and down here is the target around 140. D-Dog, that probably played out and may be needing a retrace at least back down to the breakout around 140, and it could take a little while to grind it down there. Could grind it down, and the roadmap line could come up and meet it somewhere over here in the new year. SPXL, and next upside on that one, 198. I got off of that a while back. INOD, that looks like it wants to turn down. PLTR, showing some softness. I kind of went through the upside and the downside earlier when we talked about PTIR. Upstarts, watch for the retrace NTNX, a little bit more to go to the roadmap line. AVGO, still coming up shy of getting that 195 target on the upside. DEO, Diego, looks like we're still hunting for a bottom. Resistance right here at the roadmap line. This not giant opportunity for me right now. Resistance right there, and further downside down here. FBTC, that's just following Bitcoin, another Bitcoin ETF. All right, decliners, QTTB. Ooh, man, this is why you don't play biotech right there. See, we're just like humming along. Nice uptrend of lows, and then, we just made a lower low and reverse split hiding in there. Dumpster fire, baby. Yeah, break out the dumpster fire. All right. Hershey's, we just already hit. That's hunting a lower low probably. SMCX. This is 2x leverage on SMCI, and watch out below. If SMCI gets delisted out of NASDAQ, not just like delisted, but like if it gets thrown out of the NASDAQ index, probably going to see some liquidation and this go back lower. Play, Dave & Buster's. Never been to Dave & Buster's, but we're down at support. If we get below support, guess what? Inviting a bigger flush out here. Duolingo. Man, this is one that's just rocked and rolled, man. Probably going to come back to the roadmap line. Cold. That looks like it may be setting up for a flush. We're kind of lower highs. BLCO. Back to the roadmap line. Bosch and Lom. Everybody buying some Bosch and Lom for Christmas, right? Pop back through the gap. 20. Can set up for 22, 20, 22, maybe even 24 on the upside. ILMN. This was my pick yesterday, right? My bonus trade pick. Getting retraced a little bit. 160, still the upside right there. SFHG, not enough candles to do anything with. PDD, and rejected that. This is just having a hard time. This looks like to me we're going to retest the bottom. Retest this zone right here. Just has that look to me like we're going to retest that zone. AI, watch for the flush right there. And my bonus trade today, MKC. This is one of the best looking bonus trades we've had lately. The last few days, we've had some really good, statistical wise, we've had some really good ones. This chart pattern wise is pretty beautiful right here. That high, that low, makes the retrace, the 618 level right there. Yesterday at the close, we got the close above. Today, we're not just running away from it, giving you a little opportunity to get in a little better. That would be the upside right there. Right in that neighborhood. I'll give you the official statistics here in 1 second. Just give me a second to pop it up. And pop it in here, paste it in here. Here we go. So we have 87.37, the official target. 71.51 stop. Potential upside about 543 off of yesterday's close. 45 trades since 1972. That's a nice statistical population. That's a nice long history. Longer than I've been around. And 84% of the time this works out. Bigger than 2 profit factor. Typically lasts about 55 trading days. All right, there's all the key data. There's the chart. There's the setup. There's the potential. I like it. I like this a lot, actually. Now, 55 trading days. That could be faster than that. Could be slower than that. All right, this is one of those cautionary things. Pull this over 55 days. That's right out to here. It's 83 calendar days. Why are they different? Because of weekends and holidays. All right, weekends and holidays, market doesn't make candles. So 55 bars is the candles. That puts us out here to March, possibly. And maybe it lasts twice as long as the average. So that'd be like 110 days. Could put us out here well toward May or June. All right, if that's twice as long. Could be 3 times as long. I think an average is just an average. Could happen in 3 days. It could happen today. We could pop today and be there. Entirely possible. Could happen in 1 day. Could happen in 5 times longer than the average. Could take us a whole year to get there. Just never know. All right. You have to determine if the upside is worth it for you and how long you want to try to play this for. So if you're going for options, there's your time frames. If you're looking for tying up a little bit of money in shares, there's your kind of time frame that you may tie it up. So we're looking for that move up here, about a $5 upside right there. Could it go even higher? Sure. I mean, you could be getting into something that kicks off a much bigger upside potential here. We have this high right here. We have this low down here. And this could run on up to 116, 125 if it developed on up higher. Like the 618 is sitting right there, just above the target. We rejected it right there. So this could lead to a breakout that takes us on up here. And that could last out a couple years. All right. Let me know what you think about the bonus trade for today and the bias for the day. Still cautious, watching for the support and resistance. So we'll go back and hit that really quickly before we wrap it up. Right here. Jump down, time frames. Watching for that. We're starting to push through. So if we can push on through, indicates we're going on up here. Like that. Now if we break back down, below, get a lower low, we're going on down to that 4 hour. Right there. There's the, I'd put my alert right up here. 60.95, probably going up if we get above that, and don't just spike and reverse. And we're looking for a close up here and some continuation candles to get that indication we're going on up. And if we break down below this and not just a spike, but we're talking about some continuation, and we break down below this one, we're probably heading on down here to 6,000 area. All right. Those are the things to watch out for today as we head. And if it just dies and goes sideways, that's the bummer. All right. Have a great day, everybody. I will be back tomorrow. Same bat time, same bat channel, 9:15 in the morning. Come see me. Otherwise, I'll see you later. Bye.